So mortgage rates are actually higher today, not lower after the Fed rate cut, man. Welcome back to the channel. This is Matt Garland, NMLS number 58700, better known as MG, the mortgage guy. We are alive. We are blessed. Thank God for another day. All right. So look, lots happening today. My phone's been buzzing off the hook. So many people have been hitting me up about the Fed's lowering interest rates. So I decided to come on live tonight to kind of break this down a little bit so that way you guys can have the right information, because there's a lot of misinformation out there, and I want to be the resource, be able to give you guys the right information. All right. So if you're watching this live on Instagram or YouTube, throw some gens in the chat because we're about to get busy real quick. All right. All right. So as we all know, as you guys have probably already heard, the Feds had cut rates by a quarter basis points today. This is the first rate cut since December. But mortgage rates are actually higher. Now, for those of you who do not know what impacts, what rates are really truly impacted by the Fed fund rates being cut, think about short-term borrowing, credit cards, auto loans, HELOCs, right? Personal loans. Those things are going to be a little bit cheaper, not by much, but a little bit cheaper. But mortgage rates actually rose up today. The market opened, the national average was around 6.125% this morning on a 30-year mortgage. That's now if you have 760 or higher credit scores, buying a primary residence, 20% down, right? Single family home. 6.125, give or take. The market closed today at 6.25 for that same type of scenario. So if you were looking at a duplex, 3-family, 4-family investment properties, these are not the rates for you. These rates are going to be actually a little bit higher. But overall, for that conventional FHA, VA market, the rates closed higher today. And that's because the 10-year Treasury went up. Not by much, but it went up enough for mortgage rates to have a lot of repricing and the rates going up. Okay? So when most people hear, well, the Fed's cut rates by 0.25%, is my rate going to be lower? No, it doesn't necessarily mean your interest rate is going to be lower. It can actually be higher. Now, when we're looking at mortgage rates, right, and especially when we're coming up on Fed meetings, typically what happens is rate sheets for lenders, we're already pricing in what we see the market or what we think the market is going to do way ahead of the Fed meeting, because we're paying attention to that 10-year Treasury. So last week was actually a great week for you to lock in on your interest rate. Now, I'm not saying the rest of this week might not be good for you, right? I think if you have an opportunity to lock in, if you got a contract, lock it in tomorrow morning. You don't want to play with this volatility, right? But last week was a phenomenal week to lock in. It's because lenders, we're watching the 10-year, we're seeing the movement on the 10-year, and we're pricing accordingly. And we already knew that the Feds, based off of all the commentary that was happening over the summer, that there was a high chance that the Feds were going to lower rates today. So the rate sheets had already been baked in that lower rate that most of you were probably expecting to happen today. So if you were expecting, and if you were someone who was waiting to lock in your interest rate, waiting for today, waiting for the news of the Feds to come out for you to say, you know what, I'm going to wait for the Feds to come out. I'm going to wait for them to drop a 0.25 point. Then I'm going to get a lower interest rate, right? You waited too long. right? There's an opportunity cost for everything. This is why you need to be working with someone who is extremely knowledgeable of the markets and understand exactly when to lock, when to float. Everybody type in chat, lock, float. I'm going to type it in chat too, right? Because I'm feeling good today, right? So let's put lock and then float. Just like how I put it in the chat. If you're on Instagram, put it on in the chat, please. Lock, float. It is extremely important that you understand when to do one or another. Now, you don't want to sit here and play games in this market because it's extremely volatile. Anything can happen at any given moment. So you have to know or be working with someone who knows exactly what the hell they're doing to give you that advice to tell you, okay, we're going to lock in today or we're going to float because I see what's happening in the market. See, most of you are not following the right things. You're waiting for the Fed funds rates while I'm looking at the 10-year treasuries. See, what the rookies are doing, they're waiting for the Feds to make something happen. But what the OG veterans like myself in this industry are doing, we're looking at that MBS and we're looking at that 10-year treasury. Okay? So you have to pay attention, most importantly, to the 10-year treasury. Everybody type in chat 10-year treasury. And shout out to my guy, Mr. Fingers, on Instagram. He been going crazy with the Queens, big Queens information over there, man. Shout out to Mr. Fingers. But you guys need to tap in and understand the 10-year treasury, how it's moving, and how it correlates to mortgage rates. Because that's the most important thing. One of the most important things that you need to pay attention to when you are trying to determine if you need to lock or if you need to float. Case in point, last week, what economic reports? Now, if you've been on any of my classes, if you're part of my inner circle, type inner circle in chat because we speak about this behind the scenes, right? When I do my rate mastery classes, which I'm probably going to have another one very soon. When I do my rate mastery classes, I always tell you guys to pay attention to the economic reports that are coming out. That's going to determine the motion of the ocean, which is this big matrix of mortgage rates, right? So last week we had CPI data that was released. And I think this was last Wednesday or Thursday. The days, forgive me, I don't remember which day it was, but it was either Wednesday or Thursday. One of those days, the CPI data got released. And right before that data was released, I said to myself, I was checking my pipeline, I was looking at the 10-year, and I saw a nice little dip. And I said, oh shit, let me start repricing some of my clients that I have floating. Yeah, when I tell you, it was like a 90-minute time frame where several clients, because the way the market dipped that quickly, we were able to lock them in and save them anywhere from 0.25% to 0.5%, or a quarter to a half a point lower than what we initially quoted them in interest rate. Just like that. So paying attention to the markets, paying attention to the economic data that's being released, and watching that 10-year treasury is all that I really need, right? I don't pay attention. I'm not going to say that. That's a fucking lie. I do pay attention to what the Feds are going to do because it's important. Let me not sit up here and say it's not important. But the main thing that I'm looking at to determine if I should lock or should I float, economic data, 10-year treasury, mortgage-backed securities. So, with all that being said, ladies and gentlemen, with all that being said, it's still a great time to lock in. The rates are right now on a 30-year fix around 6.25%. Now again, now again, this is not for everybody. This is another thing I want to talk about real quick. Interest rates are not one size fit all. Interest rates are not one size fit all. Every scenario is different. It's like your fingerprint, right? You see your fingerprint? It's unique to you. Your situation, your scenario will determine the interest rate ultimately you'll be quoted. So if the market rate say 6.25 national average, that does not mean you're going to get a 6.25. You might qualify for that 6.25, but it might cost you 2 points to buy it down, depending on the scenario. You might qualify for 5.999, but it might cost you 3 points to buy it down. You might qualify for 6.75, and that might be a par rate with no buy down. Every scenario is different. And let's not even talk about investment properties and investment loans. Okay? So I just want you guys to be extremely clear on this. When you're going out here and you're seeing all this information that's online, you start talking to lenders, and you guys are shopping your pre-approvals, which to me, for the life of me, I still don't understand why people shop pre-approvals and comparing interest rates when you're shopping them, because it doesn't matter at that point, to be honest with you. I can tell you your rates is 5% right now. It don't matter. You're not locking in. You need a contract. But that's neither here or there. That's a different story for a different day, right? But when you're out here getting pre-approved and you're out here talking to different loan officers and you're talking to different realtors, you need to be educated on the game so what's the best way I can say this? You're not being looked at like a goddamn person who don't know what the hell they're talking about, right? You're not looking uneducated. You got to be able to have educated conversations with these folks that sit in these positions to lend you money, because if they're talking to you, a lot of people out here hungry. They're starving. And if they know you don't really know what you're doing and know what you're talking about, guess what? You are prey. You are food. And people could take advantage of you if you don't know your stuff. Don't kill me. I'm just the messenger here. I'm just telling you what it is. All right? So, do you guys have any questions in the comments? Shania Taylor says, the Memphis Realtor says, can you say the rings what we need to be watching again? I need to get my pen and paper. Well, you need to get your pen and paper. And I said you need to watch certain economic reports. I'm going to put it on the screen right here. Shout out to Just Tool. My inner circle is always paying attention. What up, Joanne? Economic reports, 10-year Treasury, mortgage-backed securities. Economic reports, 10-year Treasuries, mortgage-backed securities, MBSs. Type it in chat. Shout out to my brother Ron Peasy. I'm going to leave that on the screen for you guys. On IG, Slim Goody said, do you think we are getting any more cuts this year? Yes, 2 more rate cuts are projected to happen this year. Who knows if it's going to be 0.25% each cut? Who knows? Right? Who knows? Look, we got to focus on the things that we can control. We can't control if we're going to get 2 more cuts or not. And I'm glad you just said that, Hard Stops. Hard Stop says, what's your message today? I'm going to tell you the message today. The message today is focus on things you can control. You can't control if the Fed's going to cut rates or raise rates. You can't focus if home prices go up, down, left, or right. You can focus how much money you're saving. You can focus on the time you spend in educating yourself on real estate. You can focus on how many offers you are making on properties to get in the game. So my message today, hard stops, is focus on the things you can control, because a lot of the things that happen within the news are a distraction. It's good to learn about these things and understand the mechanics behind it, but I think many of you spend way too much time on certain things and letting it be your end all be all. And it stops you from going out here and executing on your goals. So that's the message of the day, right? Bella Savage said, yes, prices will definitely go up because there'll be an increase of supply and demand. That is a fact. Ron Peasy said, and regardless of the rates, don't wait to buy, buy and wait. Shout out to my man Ron. My man Ron. Okay, so you got that hard stops on YouTube? All right. So that's the message for today. That's my quick little update, mortgage market update, my 2 cents, because people have been asking me in my DMs, and I haven't really been on social if you've been following me, um, especially in the last month since InvestFest. I've been kind of like, chilling. Right, I'm coming off a cold. I'm feeling good. So I say, you know what? Let me come on IG and YouTube and let me talk my shit today. So thank you guys. If you're on YouTube, make sure you like, comment, share, subscribe, hit that bell for notifications. I'm going to do my best to come on here as often as I can. So definitely make sure you guys hit that bell for notifications. If you don't follow me on Instagram, go to MG the Mortgage Guy on Instagram. And all my people who are watching me here live on Instagram right now, make sure you go over to my YouTube channel, subscribe, hit the bell for notifications. I'm going to do my best to keep you guys updated, give you my 2 cents on these quick videos. And I want to give one more big shout out to my brother Tukes. Shout out to Tukes Productions. Tukes flew into New York last week and helped me kind of reconfigure my studio. We still got a couple more things I got to add to my background and everything like that. But the quality, in my opinion, just me looking at this right now, it's looking clean, it's looking crisp. The audio sounded good, so hopefully we don't get no more complaints about that moving forward. So shout out to my brother Tukes. I just wanted to give him a big shout out as well. All right, I'm gonna take a couple more questions. Let's see. Ron Pizzi said camera quality and sound is crazy, professional. Appreciate it, bro. We gotta, if we're gonna do it, we gotta do it right. You know what I mean? Let's see. Gino said, "What is your message after coming down Fed is the impact mortgage rates?" You must have just came late to the show. My message is buy real estate. Don't wait to buy real estate. Buy real estate and wait. That's my message. Go out here and buy real estate. Shout out to Kevin Jefferson, the People's Lender. He said good stuff, bro. Now look, Kevin, you are the People's Lender. You're watching another lender, right? I love one of my loan officers, and my people in the industry are tapped into my page, because that just shows you that I don't sit here and I'm talking gibberish, because I promise you, if I was talking foolishness and gibberish, y'all, the people will be in the comments who are in the industry saying, yo, MG don't know what the hell he talking about. So I always appreciate it when all my real estate professionals are tapped in. Realtors, shout out to you. Shout out to all my loan officers out there. All my NMLS, the NMLS gang. gang. All right. Let's see. I'll take a couple more questions. Flame Bat said, is it smart to buy a rental if your monthly rental income won't cover the full mortgage? Hell no. Well, hold on. hold on. Before I say hell no, if you are buying something to house hack in, if you are buying something to house hack in, yes, it is okay to buy a house hack to supplement your mortgage payment. You have to run your numbers to see if you will cash flow once you decide to move out of that property, and what does that cash flow potentially look like. But yes, especially in areas, high cost areas, New York, DC, LA, your rent is not going to cover your mortgage payment. It's almost impossible at these prices. The sales prices are too high. The rental market hasn't caught up to what it should be to cover that, right? So those markets are more of an equity market and not a cash flow market. So if you're house hacking, then yes. If it's a true investment property, then that's not an investment. That is a lot. That is a true liability, and I would not purchase that property unless there was a huge equity play where I wouldn't now treat it as a rental. I would probably just rehab it, do what I need to do to force the appreciation, and flip it. That makes sense, Flame Batch? That makes sense? Shout out to the NMLS gang. Gang. Bella Savage on IG says, there's no time like now. History repeats itself. Home prices will continue to rise. Yes, ma'am. I believe it. Suki914 on IG said, NYC tri-state area is not a buyer's market. These prices are ridiculous. Yes, sir, they are. The prices are spooky up here. X Gary 20 said, California, yes, the equity will save you. Okay. Amarad 08 said, is it safe sound to use DSCR for rental property at this time? Absolutely. The question was from Amarad. That sounds real plausible, so I'm gonna say pause. Is it safe and sound to use a DSCR loan for rental properties at this time? Absolutely. Because a DSCR loan, the basis of it is that the rental income must cover all the operating expenses, including the debt service, and you, the owner of that LLC, is making a profit. If it doesn't make a profit, then the lenders most likely won't lend on it. So absolutely. And it's so much easier. Guys, let me tell you something. And I put this thread out. Shout out to all my people on threads. I put a thread out saying it's so much easier to get approved for investment properties than it is your primary residence. You got to look at it, right? When you're looking to buy your primary residence, we want your W-2s, tax returns, pay stub, blood type, firstborn. We want the whole 9 yards. When you buying a true investment property, we're putting it in your LLC. You have the personal guarantee it, so we're just going to run your credit. We're not asking you for your W-2s. We're not asking you for your pay stubs. We're not asking you for any of that information, right? We just want to look at the cash flow of the property, income and expenses of the property. So the property is actually qualifying for the debt. You have the personal guarantee it, so you need to be over 640 and higher. Now, mind you, if you're at 640 in today's market, your rate's probably going to be north of 9%. But if you 720, 740, 780 or higher, you could be in a good rate. High sixes, low sevens right now for an investment property where you don't have to give your firstborn to get the property. So if you got the down payment, if you have the down payment, it is definitely a good time to use DSCR loans. And there's so many other loans out there besides DSCR loans. A lot of y'all just know about DSCR loans, but man, if you're looking to buy investment properties, it's so much easier to get qualified if you are a qualified buyer, if you are a qualified operator. What's the 3 C's I always talk about, y'all? Credit, capital, capacity. If you have the credit, the capital, and the capacity, the world is yours. You just need all 3. MG, quality is great on both YouTube and IG. The exact same. I love that. I love that for me. Shout out to Tukes. We're making it right. All right. So shout out to everybody who's watching us live right now. I'll take a couple more questions. These are some good questions right now. We've been on this 25 minutes. We'll stay on for a couple more minutes. We'll go to the 30-minute mark and then we out. The Millennium Entrepreneur said, is it true that the feds are asking people that purchase real estate to report their earnings to crack down on money laundering and building wealth? Well, that's coming in the new year, and that's not official 100%. Look, when something like that happens, I wait until it happens, and then we can figure it all out. The feds and the lenders are two different things. What the feds want from an IRS reporting standpoint and what lenders want are separate and apart. So I'll say that to answer that question. And you know what? Maybe I'll do a whole video because I've seen that headline and it's been circulating around. So maybe I'll do a quick video on that tomorrow and give my true thoughts on that. But separate and apart. Until guidelines come out, I don't worry about those type of things. But it's good to be aware of what can come down the pipeline. But if you're not doing any money laundering, you have nothing to worry about. Right? That's how I look at it. And forgive me, man. I'm kind of stuffy right now. Whew. Okay. Good question, though. Good question. Good question. Good question. Al Tavares says, what is your source to stay updated with the latest real estate trends and news? I would say one of my favorite websites that I like to use is Mortgage News Daily. Al Tavares, Mortgage News. Everybody type in chat mortgagenewsdaily.com. I don't get paid from mortgagenewsdaily.com. It's just a resource that I like to use and that I tell anybody that wants to learn about real estate and keep an eye on what's really happening. You know, you can go to Mortgage News Daily. What's that? CNBC and a lot of folks that report on mortgage rates and stuff like that. They're always quoting Mortgage News Daily. So, Mortgage News Daily is one of the resources that I use, but there's a ton of them out there. There's so many different things that I use to kind of like keep myself what's going on. And plus being in the industry, different lenders are always sending stuff. And obviously Google, ChatGPT, you know, trust but verify at the end of the day, you know. I feel like I'll catch a cold through IG. uh, nah, I don't have cash anymore. Shout out to my bro Lil Dune. He has cash now. Okay, Black Yellow says, is a construction loan a good option to invest in a distressed property? More probably like a rehab loan if you're trying to rehab it up. Absolutely. You know, rehab loans is probably the best loan. Everybody who's watching this, we got about 100 on YouTube. We got probably another 100 here on IG. First of all, shout out to everybody for tapping in with me tonight. I didn't make no announcements about me coming live, so I definitely appreciate y'all just tapping in with me. But everybody who's watching this live and can watch this on the replay, if you're looking to buy real estate, you should definitely look at using a rehab loan to buy that real estate. The way to make money in real estate is when you buy, not when you sell. And how you make money when you buy is you buy under market value and you force your appreciation. And especially if you're a house hacker, first-time home buyer, you should definitely be using these rehab programs. Get 100% of the rehab cost. Fix up that house, man. Make it look nice. It's going to save you more money in the long run if you make shit brand new. And it's going to make you money. So Black Yellow, yes, you should be using a rehab loan. Real592 on IG says, I'm NACA qualified, and I've been searching for a multifamily in Newark, New Jersey for a year. Inventory is scarce, and prices are stupid. That's a fact. See, this is why you need to be working with me and my go-to realtors, right? And you need to be working with realtors that are investors that understand how to find those diamonds in the rough. And maybe NACA is not going to be the loan for you. Maybe you need to get a rehab loan. Now, I'm not going to talk you out of a NACA. Use that in your back pocket, right? But you got to broaden your horizon. Like you can't go to a gunfight with a knife. Sometimes that NACA be the knife. You need a fucking pistol. So you need more ammunition. So I would say real 592 on Instagram, broaden your horizon, get more ammunition, get pre-approved for rehab loan, regular conventional, whatever it is. So that way when you're out here searching, it's probably going to open up what you can get qualified for. Also remember NACA is going to qualify you for less money than an FHA or a conventional mortgage too. So that could be probably part of your problem as well. Now, again, I don't know your situation. I don't know what you're going through. I am an advocate of NACA. I think it's a great program. I don't make money from NACA loans. But I'm just telling you what the challenges that you face with using a NACA loan. So, real 592, if you want a second opinion, email garlandgroup@unmb.com. I'm gonna put the email garlandgroup@unmb.com. I'm gonna put it in YouTube as well. So if anybody wants to get pre-approved and work with me and my team, just make sure the subject says YouTube, something like that, and email us. I just put it in the chat, Garland Group. I'm gonna put it on the screen too so you guys can see it. The email's right there. Everybody take a screenshot of that. Email. We would love to help you get to the closing table. If you're learning from me, let's get to the closing table. Get you a cool mist humidifier and help with the congestion. Yeah, I'm on it. I appreciate that. Bella Savage, you active today. I love it. She said, I wanted to get a NACA to get a property, but the areas that the houses were in was a fuck no for me. Yeah, I'm telling you. Thanks, MGA. I'll reach out. NACA has been driving me nuts. Pause, bro. I get it. I get it. That's what I'm telling you. That's what I'm telling you. What I'm telling you. Right? NACA is a good program. It's a good program. But, there's other options out there for you. Let's get you to the closing table. Everybody here. Let's get y'all to the closing table. But all right. That's all I got for y'all, man. Like I said, I just wanted to come on here real quick. This was a good question. Would you flip a trailer? Man, I'll flip anything. If it make both sense and sense, it gotta go. I'm not emotional tied to anything. Nigga, you see this mic right here, pause? I'll flip this shit too. You want to give me, I paid 400, you want to give me 600 for it? It's yours. I'll get a new one. Flipping anything. Maynard in Brooklyn says, I got my loan from you in 2020 for 2.6%, was the lowest anywhere at the time. Shout out to Mano, Brooklyn. I wish I could put this on the screen. But he says, I got all my IG people, you'll see the comment. I got my loan from you in 2020 for 2.6% on a 30-year. Was the lowest anywhere at the time. That's what we do. That's what we do. I'm still pro NACA, Miki. I'm still pro NACA. I'm not saying I'm not. I'm pro NACA. A lot of y'all learned about NACA being on my channel. I'm definitely pro NACA, right? I talk about it all the time. I encourage people to use NACA, but every mortgage is a tool, y'all. It's not about NACA. It's not about FHA. It's not about conventional. It's not about VA. When you build a house, do you just build it with a hammer? Or do you need a screwdriver too? The handyman just don't come, and the contractors don't come with hammers. They come with a whole tool fucking box. Mortgages are the same way. These are tools that help us build wealth, ladies and gentlemen. So why are we just worried about one loan product? That's the problem with us. We get fixated on one thing. And it's like, oh, I need to get this. No, I need to get everything. And let me see how I can use all these wealth building tools to help me build my wealth. Contact information is on the screen, Big Cliff. Email garlandgroup@unmb.com. And look, let me tell you guys, and let me make this clear. If you email in with a laundry list of questions, you're not going to get a response. If you're emailing saying I'm in contract, I want to refinance, and I want to buy, or I want to buy a house in 4 months, I need to get pre-approved, you will get a response. But if you, because some of y'all be taking these emails and getting outrageous and writing me a 4-page letter. First of all, ain't nobody reading that. So you've been warned. Disclaimer. 9 to 5 landlord on IG says, "Do you think younger people breaking into the 6 figures go into bigger luxuries, expensive car, house, etc. too early? Did you wait a while before you did?" That is a very good question, and I think more money, more problems. Big said it the best, right? When Big came out with that song decades ago, and when he said that verse, I never understood how somebody can say more money, more problems. I would think you have more money, you have less problems. But I think he was referring to the more money you get, the more bills you have more people who want you to take care of them. So yes, do I think people in general, no matter if they're younger, older, when you start touching some real money, you start thinking about all the things that you never had and you want. And you stop thinking about what your needs are and you go strictly for your wants because that's just human nature, right? When you first start touching some money. So absolutely, I think we all go for the luxuries, especially if you're from the hood. We see the athletes and the dope boys and the scammers getting busy. We want to get busy too. We want to look good. We want to look fly. We want to drive the fly cars, but you got to have discipline. You gotta have discipline with this. And you gotta live within your wage. So yeah, I think people of all ages do that. 9 to 5 landlord. And I was one of those people who did it too. I went crazy. Couldn't tell me nothing in my 20s when I started making 6 figures. What? Shit, you couldn't tell me nothing. All right, I've been on here going on 40 minutes, man. That's all I got for y'all. Um, Again, thank you guys for joining today. Like, comment, share, subscribe. If you're not following me on YouTube, make sure you follow me on YouTube. Hit the bell for notifications. If you're not following me on IG, make sure you tap in and follow me on IG. All right? If you're on IG, this video will be saved on YouTube. So if you want to watch the replay, go to YouTube and watch it. All right? That's all I got for y'all. I'm out of here. Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. Y'all have a blessed night. Thank y'all for tapping in with me tonight. Peace.